In this episode of Smart Humans, we talk with Ben Reinberg, who's the CEO and founder of Alliance. Alliance is an awesome commercial real estate investor. They've invested into thousands of properties for over 30 years. He gives us his take on what is happening in the economy and what is the future for America. What are the hotspots in commercial real estate in terms of verticals and where to watch out? What are the hot geos and where to watch out? And last, he gives us his predictions as to what are a couple great investments to make for the next few years.
Welcome to Smart Humans with Slava Rubin, presented by Vincent. In this alt investing podcast, Slava talks to amazing minds about their investment journey and finds out what it takes to make it in the markets. And now, here's your host and smart human, Slava Rubin.
Hello, and welcome to the latest episode of Smart Humans. Super excited as always for today's guest. We have somebody who's an expert in all things commercial real estate and more. Hello and welcome, Ben Reinberg, founder and CEO of Alliance.
Slava, thank you for having me on. I really appreciate it. It's good spending time with you today.
Absolutely. So let's just dive in how we always do, which is how did you get into alternative investments and into this world? Where did it all begin?
When I was younger, I was always trying to build wealth. And for me, it was looking at what could produce wealth. And coming from Chicago, Slava, is commercial real estate to me was the number one asset class to produce wealth, build cash flow, produce wealth, let properties appreciate, get tax benefits. And there was a proven concept with all the billionaires in Chicago that owned commercial real estate. It was real apparent of how to produce wealth. And so when I saw that, I said, I want to be in that position. I want to be the guy that can produce wealth, cash flow. I wasn't looking to get rich. I was looking to build wealth. And that's always been my number one goal. So commercial real estate became the outlet, and I taught myself the business and started doing deals. And here we sit today. We have staff all over the United States. We've built millions of square feet of office and industrial. We own office, industrial, and retail, and we have a large niche in the medical office space. And then, which is really exciting, this month in July, we launched our brand new multifamily division, which we could discuss as well why we did that. But that's really exciting. So we're getting into that space. And then we're big into the technology space now as well.
Amazing. So you say when I was younger, and that's a pretty open, phrase. Are we talking about when you were 8 or when you were 28? Did you start thinking about building wealth?
Well, when I was 8 years old, and I say this publicly, I was selling cigarettes at a bar. I used to break up cartons of Marlboro Reds.
At 8?
At 8 years old, and go into the bars in the Chicago area where I lived. Because where I lived, I had the most bars per square capita per mile in the United States when I was a kid growing up.
Where is that? Is that south side or north side?
No, it's north. And so what happened was we had an army base down the street as well. And so you had a lot of people drinking and smoking in the bars. And the bars used to have open doors where, as kids, you could walk into a bar. It wasn't regulated. Like, there was no guy at the front carding people. You're a kid, you walked in, maybe you went to go see a parent or a friend or whatever. It was very loose. Like, there was no real regulation about going into a bar as a kid. So I would be able to go in, and I saw the cigarette machine. I saw there was a niche. And at the time I was learning about math, and I realized you could buy a carton of cigarettes for, let's just say it was like $8 and the amount of packs. I figured out the cost per pack. And then I had to tip a guy to get me the cigarettes because I was too young. So I had to add that to my capital stack, as we say in my business. And I figured out, okay, well, if my total cost is $1 and I could sell it for $1.25, or let's say it was 80 cents, I sold it for $1.25, I made 50 cents a pack. Back in 1978, when I was 8 years old, that was a lot of money. Well, you add it up, and once you were able to get into a certain bar and sell it, you'd go through a carton pretty quickly. So there was times I was going back to the mom and pop drugstore and trying to buy cigarettes on a frequent basis. And so I learned how to leverage into people that were older than me to buy me cigarettes and to sell it. And I made some money and lasted about 6 months. And so I did that when I was younger. But when I got into my 20s, I said, okay, well, how do I make real money? I want to start my own business. I mean, my goal when I was in my 20s was I want to have my own business. I don't want to have to, I was a rebel. I don't want to have to listen to anyone. I want to pave my own way and create my own future. And that's a typical entrepreneur spirit. Now, back then, they didn't really use the word entrepreneur. It was more of a business owner. And so to me, that's what I was looking for. And commercial real estate was the outlet for me to be able to create a business and start building wealth. And that's what I used this hard asset for.
Nice. So if you're from the north side, does that mean you're a Cubs fan?
I am a Cubs fan.
All right.
I'm a Cubs, Bulls, Blackhawks, Bears. It's hard to be from Chicago and not be a sports fan. It really, and so what's interesting is, people ask me like, why the Cubs and not the Sox? My grandfather was a huge White Sox fan. And people say, well, is there like the Yankees and the Mets where there's like a hatred between the two? I mean, there is a rivalry, but if the White Sox go to the World Series and they win it all, it's great for the city. So I think you're foolish not to root for both to see them be successful because it only helps the economy of the cities.
So did you go to college?
Yes, I went to Indiana University.
Okay, so you're a Hoosier. So when you graduated from there, did you right away know you wanted to get into real estate, or how did you go from there to? Because you're the founder of Alliance. Right. What year did you start Alliance?
It was back in the early '90s. I started.
Oh wow!
So I graduated from Indiana, and I went into accounting for about a year, and I hated it. It was
like one of the big firms.
No, it was actually a boutique firm that was big into the entertainment business in accounting for a lot of entertainers and movie production companies and cable companies. And I went on some great audits and did a lot of high profile tax returns. And I just looked at my life and I looked at like what the partners were making, and it was a good, honest living and they had good lives in this firm. But I just realized, I said, I don't want that life. I don't want that life. And so we had some clients in commercial real estate. I saw what was going on in the Chicago market with some great icons. And I just jumped. And after I left the accounting firm and said, okay, now's my time. I got to get into business. And I figured it out. And I did a lot of reading and a lot of research and talking to people. And the research was I want to buy assets that produce wealth.
So what was that first purchase, or where did you get that confidence to make that jump to go from I'm working for the man to now I have to become the man and now I'm dependent on myself? Can you give us a little bit of that background of that first jump?
Compared to most people, I didn't really come from money. So I wasn't poor, but I didn't come from money like that I was looking to build. And so I had to figure out, well, okay, I can't lean in on family. Okay, I'm not going to get a loan from family, but I could use my knowledge, my education, and resources and figure it out. And so for me, I had nothing to lose. And I mean, for me, it was, okay, so what happens if I fail? So everyone out there listening, this is a good lesson. I'm just back to where I started.
Right. You get to learn. You get to learn from failure.
So I had no shame. I had no guilt. I said, I am so hungry to start my own business and get it done. I didn't think of the word I won't, I can't, I shouldn't, that it's not going to work. Failure was never like an option for me. It was never like I wasn't going to stop at whatever was the business or my knowledge to be, or the destiny of letting something tell me I can't do something. I knew that I had to work for myself. I knew I had to create my own wealth and my own destiny. I knew that my behavior and actions were going to guide me to where I need to go. And I had to leverage all my hard work and skill up to that point to get to that point. So for me, it was just about grit and determination, persistence, and believing in myself. And even when times were tough, just to have the ability to have my mindset say, I'm going to get through this. This shall pass, and we'll keep moving on. And that's been the story of my career, is like, whenever I face a challenge, and there are different challenges now, it's this shall pass and we'll get through it. And we always do, because we always look back and we say, you know what, that was a good growing experience. And so every challenge I look at now is growth. You throw a challenge in front of me, I'm like, okay, where's the growth now into this? We
I
see that
love.
every single day in our business. I see that with my staff, my leadership team, and teach that too. I said, look, when you see a challenge, look at it and say, okay, I'm going to grow. This is a benefit. This is a sign and a warning to me that I'm here to grow and learn from this. And so, and we all do. We all learn from experiences that happen within my company Alliance and externally as well. And so, for me, when I was that age in my 20s, what did I have to lose? Nothing.
Amazing. So you've now been running Alliance for around 30 or over 30 years. You obviously learned a ton. What is it that you would want to tell your younger self that you know today, even though you've accomplished incredible things, so there's no regrets? But what is it that you would tell your younger self? Because there are some younger selves that are listening to this podcast. So what would you tell yourself, 30 years later that that you wish you knew when you first started? And don't get me wrong, naivety is great. So you don't
Yeah.
want to know too much. But what would you want
No,
to know?
and it's a great question because when I look back, I would have said, can really learn how to manage your emotions when you're younger. Learn how to work on yourself, learn how to master yourself, your emotions, your communication. I would have, if I could go back in time, I would have worked on communication 24/7 and mastered it. Body language, communication, writing, speaking, whatever it was at that point in time, that to me, because communication equals wealth. And if communication equals wealth when I'm a young person, that would be something I would double down on. That I think would be a big help in anyone's career, no matter what industry you're in.
Sweet. That's super helpful. So you're obviously now quite accomplished. You've built wealth. We love to ask our guests about what they think about the various alternative investment sectors and how they invest their wealth. So we break down the world into, the old way of thinking about it is, 60-40 equities and bonds, right?
Mm-hmm.
And obviously that's evolving and you need to have your private sleeve, whether it's crypto, whether it's pre-IPO venture, whether it's private credit, whether it's real estate. There's so many options. Art, collectibles. So what do you think about these various categories? So we'll first start like in pre-IPO venture or crypto. Let's start with those two. What do you think of those
Yeah,
two?
I mean, I love crypto.
Oh, you
I'm
do?
actually, yeah, I mean, my oldest son is in the blockchain business.
Nice.
So I
How
know
old is
that
he?
he is 24. So I know blockchain is going to be very material when it comes to commercial real estate in the future, whether it's dealing with title, whether it's liquidating assets. Blockchain is going to have some sort of fingerprints all over. So for me, I'm learning the business and I have a portfolio of cryptocurrency and I think it's great. I believe in it.
Is it mostly Bitcoin and ETH, or do you go beyond
No,
that?
it's diversified. I mean, my son helps me build a portfolio. I have coins that I have no idea what they are, but I trust him and I'm up, I don't know, 30 something percent on the portfolio. So how can
Nice.
I complain? It's great. And so he's very good at picking them. But crypto's great. I invest in, pre-IPO stuff. I'm looking at something right now. I'm a risk taker and I'm a capitalist and I like making money. I believe, Slava, very heartedly to diversify your capital. It's why when people invest in our funds and our syndications, we diversify them as much as possible because diversification to me is tremendous to mitigate risk and protect your downside. So when I look at investments, I mean, I look at cryptocurrency and I say, okay, well, if I allocate a portion, what does that look like? Am I diversifying in that space? And I'm learning about it. Once I start understanding an asset class, I'll invest more and more into it. It's for me, I go slow and then I start escalating the investment cycle. And so I invest in private equity as well. I invest in tech companies. And I invest a lot in with what Alliance is doing too. I mean, Alliance has different asset classes. We have some incredible technology that's coming out that I can't discuss yet because it's proprietary and we're working on it, but it's going to change the way commercial real estate is done. And Alliance is eventually going to be a tech company that is an expert in hard assets because the whole world is going towards technology. And so we see that. So we're like, okay, well, we got to get involved in AI heavily. We got to get involved eventually in the blockchain, and start learning that. And so we're being proactive, and all this takes capital to be able to invest. So, to answer your question is I like looking at all different asset classes and trying to get my arms around it. And I take a foundation, because that's what people do for us, is I look at who's the sponsor behind it all. How do they deal with challenges, Slava? I want to know, like, how are they going to deal with a tough time and a tough environment? So, for example, right now in 2025, and they're projecting over $30 trillion of commercial real estate loans are coming due. So what's that going to do is people are going to be filing Chapter 11 to protect their assets with lenders. People are going to be selling assets, which means the Alliance Medical Fund and the different asset classes we work on will get some great buying opportunities for investors. But it'll also have an opportunity to buy debt and do some other things. And so when I look at all these things that are out there that you can invest in, is I look at who are the people standing behind it? What's their experience? What's their track record? How do they deal with issues and challenges that come up? What does the leadership team look like? What do their resources look like? Who does their accounting? Who does their legal? How do they deal with insurance? And I look at the questions, the platform we built, and I say, well, there's other people that do other platforms and different asset classes around the world. How do I leverage into those great talented people, just like people leverage into what we're doing? So yeah, I think it's great. To answer your question, is diversification to me is important. I think learn, keep your eyes open. If someone shows an investment, you don't have to invest, but you know what? Learn from it. Because you know why? And say to that person, you know what? I'm trying to get my arms around this and get comfortable, but I'm interested. Be genuine and upfront. Don't waste someone's time, and say, can you hit me up on the next opportunity? So, for example, I have people that send me oil and gas deals all the time. Okay. And I've invested in some. I don't really get it. You know, I hear about, well, it's, if you keep investing, you know, the averages work out with a dry hole and blah, 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 blah. And so it's good, but I have to feel comfortable. And so I always tell people is get educated on an asset class that you like. Whatever your expertise is, become an expert in that field. So for me, I double down on commercial real estate, invest a lot in what I know, because that's my expertise, that's my comfort level. But I also, when I make money from my expertise, I can say, okay, now how do we diversify that capital into other things? And how do I learn and grow from that? And so diversification is always going to be a platform I adhere to.
If you had to guess, what would you say your mix is like of public equities, bonds, and then all these alternative assets, and take out your equity wealth as it relates to Alliance, because that's obviously like unfairly weighted there.
Yeah.
So what would you say those percentages high level are?
I would say alternative investments, I'm probably more like 60 to 65%
Oh,
in
really?
alternative investments. Yeah, because that's what I do for a living. So for me, I understand it really well. So,
And you feel more comfortable
and,
there than putting it into, let's call it the
like,
S&P and just.
yeah, I mean, I put stuff in the S&P and it's great. I think what bothers me, Slava, about that is I don't control the decisions in some of my investments. So, for example, why I'm biased towards what we do is because I can go kick the bricks and mortar of every property. So, for example, let's say you were an investor in our Alliance Medical Fund or another syndication or another fund. You can go and fly to Arlington, Texas, and go see the property that you're investing in, or the fund that has the different asset classes. That's transparency. So transparency to me is everything. And so when I invest in a stock or an S&P or a mutual or something, it's great. I'm diversified. It's public knowledge. They have certain regulatory requirements. That's all well and good. But I can't control the decisions the board makes. I can't control the decisions the CEO makes. And so to answer your question, I really like hard assets. I like hard assets that spin off tax benefits. That's attractive to me. So I have a lot of capital in real estate, obviously. I have capital in alternative investments. I have capital in, the cryptocurrency world. And, and then have safe money, like money in treasuries, which is doing fairly well compared to used to. I mean, but that will change probably next year. And so what I do is I look at different asset classes. I look at what's going on. I look at interest rates. I look at future interest rates, and I start hedging. Where do I want to put my capital? I'm not a commodities guy. Like, even though I'm from Chicago, there's a lot of guys that invest in, the mercantile exchange stuff and whether it's, hogs to metals to you name it, and they trade that. Some people trade options, and everyone's got their own niche. And so what I do is I invest a tremendous amount of time in commercial real estate because that's where I feel the most comfortable and where a lot of my capital goes. So,
And you have over 30 years of proving that you're good at it.
yeah. So for me, it's like I don't have to reinvent the wheel. And not only that, I make a tremendous amount of money for high net worth credit investors and family offices that invest with us. So they're relying on me to constantly grow, mature, and evolve in the business with technology and new knowledge. And so I have that fiduciary responsibility to them and the public, and I honor that. And so that's important to me that I keep learning.
Awesome. Last question in this area. So, how about hard assets such as art or collectibles, like a Michael Jordan rookie card or a Monet? Is that interesting at all, or more just
Very,
as a spectator?
very interesting. Yeah, I want to get into art, and it's something, I was just in Spain and Europe. It was my third time being there, and I just love it. And what I love about going to Europe is just the art and learning about it. And so I collect wine, and so enjoy art, and it's something I want to do more and more and get involved in. There's also, I'm looking at investing in educational stuff, like stuff you could donate to the Smithsonian and stuff like that, and get good tax breaks. And so I love that type of stuff, and looking at depreciation. So investing in wine is great. I've invested in certain bottles, and they've appreciated drastically. You could sell them, you could auction them off.
Do
And
you
so
actually do that,
I
or are you
love,
mostly just?
I've
Do you
done it a
actually
few
sell any of your
times.
wine?
Yeah, I do. I have sold some of my wine and done very well with it. But because I only have a certain amount of time, Slava, like you do, and you
Totally.
know this, it's like, where do you have to pay attention to your time? And so I'm being pulled in 1,000 directions, but I enjoy it. I mean, when an opportunity is in front of me, I can analyze it quickly and say, okay, is this something I want to do? And so it comes back to really the topic for everyone that's listening to this is your time. Your time is your most valuable asset. And so where you choose to spend it, especially if you're going to learn how to invest or you're going to make it a career like I did with my company Alliance, is where are you going to spend your time? And so for me, I love wine. I'm a wine connoisseur. I like spending time there. Yes, I could definitely double down and make some more money and do that. But I love learning and growing in other things. So just another tool in my toolbox that I could do to make money, enjoy it, and make it a little side business if I wanted to. But art is definitely something important to me. It's something I'm growing into. And then I love, the other stuff too. I love the fact that you can get in and buy like artifacts, which are out there you could do. So there's so many different alternative investments you could do to make money. And the other thing, Slav, I think that's really important is leveraging into talent. Because let's just say, for example, you're an expert in art, right? And if I could pick up the phone and say, okay, I'm looking at this piece, here's the negotiation, whatever. I was wondering if I could ask you a question. So being vulnerable and leveraging into talent is something I am outstanding at, and I'm very resource rich about. And I believe in that. So when you have someone that has a great structure, could be in commercial real estate, it could be in art or whatever, be vulnerable and leverage into people and knowledge, and also give too. You got to give, so whenever someone has a real estate question, they always call me, and I give my time because I know they're an expert, or they're going to teach me. Could be anything. They could be experts in investing in orange juice, or they could be an expert in, picking great restaurants or whatever it is. Or, Ben, let me show you the best way to travel, or here are the best hotels to stay in when you're traveling. Whatever it is, there's something that someone knows that they're going to teach me. And so when I give my time to help in business and real estate and commercial real estate, I get a lot of calls from investors saying, hey, I'm buying a house, Slava. I was wondering, I'm in the negotiation. Take me out of my box. Am I being foolish? Am I asking for too large of a credit? Am I being a pig? What's going on? Pull me out of my box. And I do that. And I hold up the mirror and I'm like, okay, well, how important is this to you? How important is this compared to this? And where are the trade-offs? And they start looking at it and they make a decision. Well, that knowledge and advice I could give someone, to me, is huge. And in turn, it always comes back to you.
That's great advice. Paying it forward is huge. So moving on to the next topic, which is, what do you think of the current market? What do you think of the current economy? What do you think of the stock market? These are all massive questions, totally
Yeah.
open-ended, on purpose.
Yep.
You have an incredible view across your many years and all the properties and all the analysis. So we'd love to just to hear your take on it.
Well, it's a great question. The timing couldn't be better, Slava, because they just announced that they're projecting, the experts, the economists they're gonna lower interest rates twice coming up. Now that's going to be interesting because commercial real estate is really in a low right now. There's a gap between the bid and the ask. In 2023, we had 65% down in transaction volume in investment sales. People
Sorry, what was that number?
65% down in transaction
Wow.
value in volume. That's how bad it was. And so to maybe lower interest rates, maybe some properties will start moving. Maybe people will be able to refinance. Liquidity will help. So I support that by Jerome Powell if he does that. Hopefully he does. And I look at the market. The stock market's doing okay. I mean, I saw it touch over 40,000.
It's doing great. I mean,
And
it's led by a few huge companies, but they're really crushing it.
Companies are crushing it, and we could talk about some of those. And so it's challenging because it's hard to know where this economy is going with this election coming up, and it could go sideways or it could just start flourishing. And so the election is key, and this election is going to be really interesting because it's going to determine where does this economy go. And
Is your prediction that you said it either goes flat for a while or it flourishes? Is your prediction that for the end of 25 it's going to be in the flat phase or it's going to be in the flourishing phase?
I think it's going to be, I think we're going to flourish. I think what's going to happen in 2025 is we're going to open up the pipeline. We're going to start producing energy in this country, which is going to be a spark and a catalyst, not only for jobs, but also help reduce interest rate. We're going to start producing revenue in this country and start exporting oil and becoming the lead producer of energy in the entire world again.
What's your prediction on interest rates for the end of 25?
Well, after the interest rates,
after the two,
let's say they drop it twice
in 24.
They're going to kind of let things settle. And then I think probably in the third and fourth quarter, they'll drop them again if the economy's really doing well.
Of 25.
Of 25. And so you just have to see, because the interesting thing right now, Slav, is that the banks don't have liquidity. Okay. There's a lot of private equity that are investing in regional and small banks right now to bail them out. And because these banks are so top heavy in commercial real estate, they know what's going on. A lot of banks are trying to get rid of their portfolios of commercial real estate. So there's not a lot of financing going on in commercial real estate. So the bridge lenders have really become prevalent in our business. So when you look at these things, you say, well, wait a minute. If they can lower interest rates, generate more liquidity, more people will buy homes, there will be more jobs here. The economy will snap back and be a lot stronger. And I believe that will happen in 25 and 26. I think it will take a while. It might be third, fourth quarter it begins, but I believe you'll see it. I think when we start generating revenue for this country and people feel more confident in the economy, people will start spending more money. And
great.
That's what I see.
Let's transition to Alliance, because you were talking about commercial real estate, which is, you've been around doing incredible work for a long time. Not everybody knows you. So what is Alliance? And can you give us some of the metrics, the numbers in terms of the scale and the accomplishments?
Yeah, I mean, we are experts, Slav, in office, industrial, and retail. And we've built millions of square feet of office industrial in our career. And we've done thousands of transactions. We've strictly been principals, where we own and manage our entire portfolio. We raise equity from high net worth accredited investors as well as family offices around the world. Recently, like I said previously, we just launched a multifamily division. The reason why we did that is because we see a tremendous amount of buying opportunities forthcoming in the multifamily housing sector. And so we want to take advantage of that for us and our investors. And so for us, we have 200 plus years of leadership team experience at Alliance, offices around the country. We own and manage properties all throughout the United States. We have a large concentration, which we started years ago, Slava, was if you look at the smile states, you start in Virginia and you draw a smiley face down throughout the United States. That's where we own. We go through, the South Texas, New Mexico, Arizona, up to Utah, Idaho, and Colorado. And so we're very meticulous now. We want pro-growth states. We want states with population growth, pro-business, and states, if you're looking at the Alliance Medical Fund, because we have large presence in medical office, one of the leaders in that industry, is we look for great medical office markets, which is great residential growth, pro-growth. We see where the great hospital systems sit, and that allows us to flourish with our properties in those communities around the United States.
Super basic question for my audience. What makes something commercial real estate versus it not being commercial real estate?
Sure. So let's just take a step, because everyone knows residential and the housing market. So we could start with that. It's 5 units or more is a piece of commercial real estate when it comes to a multifamily property and apartment complex. Commercial real estate consists of, it could be a retail strip center, shopping center. It's zone commercial, these properties. It could be industrial property. Industrial as distribution, manufacturing, incubator space, you name it. It could be an office building, could be a skyscraper to general office, single-story, multi-story building you see in the suburbs, or any of your communities that your folks live in that's listening to this show. And then it could be medical office, which is one of our niches, which is a sector of office. It could be research and development. It could be cold storage. It could be self-storage. Self-storage facilities you see in your communities, that's commercial real estate. And so commercial real estate has different zoning laws around the United States, but it's zoned commercial. And commercial to us is multifamily over 5 units, office, industrial, retail, hotels are commercial real estate. Mobile homes is commercial real estate. So there's a lot of sectors, Slava, in the commercial real estate space, and we have a large expertise in a lot of these asset classes.
That's awesome. And with so many years of experience and so many transactions, you obviously have a ton of experience. What would you say is the difference, like very high level, the one or two pieces of differences between high level commercial real estate versus high level investing into residential real estate? What's the just one or two pieces of differences?
Yeah, I mean, residential has a different analysis. So to take commercial, Slava, is you're looking at the real estate fundamentals. You're looking at cash flows, the predictability of cash flows. You're looking at vacancy rates. You're looking at absorption rates for space. You're looking at what market am I in? You're looking at population growth. You're looking at what sector am I in and where's my location? You're looking at the ability to hold. Do I have enough reserves? What's the construction of the property? We also look at barriers to entry. Are there vacant pieces of land, and what's the zoning that can compete with our portfolio, or our existing commercial real estate that we're looking at acquiring or we own? Now, you take the flip side, residential, it's a different business. They're comparing comps from one house to another. I have 3 bedrooms to 4 bedrooms. I have this amount of bath. What are the finishes? But the number one driver in residential real estate that no one talks about, I never hear it online, is the schools. Schools drive the values and the demand for commercial real estate. So I've seen
You
that
mean
in my
for residential?
hometown.
For residential.
For residential real estate, excuse me. So for residential real estate, I've seen that in my old hometown in the suburb of Chicago, where I raised my kids. And you could be in different sectors of the same city or the same town. Some are more demand and profitable for residential than others because of the schools. You got better schools, or you got better demographics. So demographics, construction, square footage, amount of land, taxes, insurance. You're going to look at mortgage rates for residential. It's a complete different analysis. It's not as sophisticated as commercial real estate, but it's a different analysis. It's more of, I'm comparing one to another, and that's my basis for value. Instead of commercial real estate, you're more looking at income. You're looking at price per square foot. You're looking at the location. You're looking at the credit of your tenants' impact value. So the valuation equation is so much different comparing the two asset classes. So residential is a little bit easier for people. That's why you see all these people say fix and flips, and they go in and you see all the shows on HGTV. I work out with a few of these people here in California where they're going in and they buy and they rehab, and then they have a show. And there's a lot of people out there that are doing it, or they're what they're calling wholesaling. They're putting a house under contract and then they're flipping the contract to. So the residential investors use all these different terms, but at the end of the day, the valuation is all based a comp analysis. It's not based on income approach. It's not placed on replacement costs that we look at in commercial real estate. It's more about what do I have, Slava, and what am I comparing it to?
Got it.
What are the variables I'm comparing?
That's awesome. Super interesting. You mentioned so many different slices of commercial real estate, probably like you might have done 20 or more. What would you say, and I'm sure there's many others, what would you say are for the next 3 years, the 3 verticals that you're bullish on? If you just got to name 3.
Yeah. Well, medical office, obviously. I mean, I tout medical office and veterinarian office. One of my favorite asset classes. The human body's never going out of style. I think industrial is a great asset class coming up, especially over the next 3 to 4 years. And I believe also multifamily is going to have great opportunities in the next 12 to 24 months. So those 3 asset classes I'm very bullish on and very excited to really expand our portfolio.
So medical and veterinary is obviously like where doctors and veterinaries are, putting their offices and such, or the hospitals. And then what exactly is industrial?
Industrial is take a facility like a distribution facility. Let's say a lot of people know Amazon out there. So Amazon might have 1 million square foot distribution facility where they house their goods and they bring in the trucks.
That's industrial.
So that's an industrial type property. It could be, you might be manufacturing something in a industrial building. That's industrial as well.
Okay. And obviously with the trying to bring everything back to America, there's going to be more of that industrial type of build. Is that right?
Well, it's not necessarily build. It's going to be more absorbing vacant space.
Oh, I see. Like malls or other big spaces.
Yeah. So if there's vacancy in industrial and we have more distribution going on in this country, they'll backfill those vacant spaces. And so there's real opportunities to buy some vacant buildings, really add value.
And what are the parameters for a multifamily?
A multifamily is, well, what's going on in that space? Let's talk about that. The multifamily space, a lot of investors have bought at really aggressive pricing. And because of rising interest rates, it's been very challenging for them to get liquidity to refinance. So they're going to be selling their assets in order to pay off their loans and get out of these properties. And so multifamily is over 5 units.
Got it.
We're looking at buildings 200 plus units per investment.
Oh, so there's no max. It could go up to many, many, many units.
It's
still called a multifamily.
Yeah. I don't know where you reside, but like you drive around anywhere in the country, you'll see multifamily developments where it's a complex and they have a clubhouse, they might have a pool, depending on where you live, maybe tennis courts, basketball court. And so they have amenities, maybe a workout fitness facility. And you'll see around there might be 200 to 500 units.
Got it.
And you might be in a CBD area where you have a multifamily high rise that has 400 or 500 units.
On the flip side, what's 2 verticals that you kind of want to stay away from for the next 3 years?
Well, we've been feeling this way for a while, but general office is something that bothers me. I mean, I was in Chicago recently and I was with a friend and he was saying 40, 50, 60% vacancy in skyscrapers.
Yep.
It's that asset class just doesn't have absorption, Slava, because big companies are downsizing. A lot of people like working hybrid. You go to a coffee shop, okay? Just go outside and go drive to a coffee shop. How many people are you seeing working on a laptop? And by the way, the younger generation is moving towards that and gravitates towards that. So I don't know how that's ever going out of style. And so because of that, general office is going to be tough. The other asset class that is tough right now that's going to change is multifamily. If I was investing and had a portfolio from the past, I'd be very cognizant, aware of like what's going on in that portfolio. That's a tough asset class. The reason why we're getting into it is because when it's tough, there's great buying opportunities. And so we're going to turn that around. And then I would say, generally speaking, other asset classes in real estate that concern me is residential. I mean, this younger generation wants to rent. No one wants to own a house. So I don't know what that business is like if you're there and you're rehabbing homes or, you're in certain areas and maybe the schools are struggling. More and more parents are homeschooling their kids. And so there's a lot of shifts going on. Those shifts are going to impact someone buying a home.
You did such a great job of giving us the breakdown for verticals. What's like two geos that you're bullish on? Two specific, let's call it cities or areas, MSAs.
Well, I love the state of Florida, and I love Orlando and Tampa. Those are great markets.
So specifically Orlando and Tampa. That's your
Yeah, and in between are great markets that I love. I'm very bullish, especially commercial real estate. I also love Dallas, Fort Worth is a great market. That's another good market. I'll give you a bonus. I would say anywhere in South Carolina that's a mid-size or big city is good, and North Carolina are really good as well. I'm big. I love the Sun Belt for certain asset class. For medical, what we do, it's great. Now, for multifamily, if you're in a stable economy and maybe a state where people aren't investing because multifamily is very competitive, it's a sector, it's an area of the country you want to look. So depending on your asset class, Slava, it's really going to depend on geographic location you really want to explore. But when I look at like medical office, which is a large sector of our portfolio, I'm looking at population growth. I'm looking at pro-growth. I'm looking at where the hospital systems thrive, and it's in the South, Southeast, and Southwest. And so we look at those pockets too. There's sectors in Phoenix that are on fire. Las Vegas is doing very well, tax-free state. People are moving to Idaho and
right.
Utah. So there's a lot of great locations.
What are two geos that you're bearish on?
God, that's tough. That's a tough one because
I finally asked you a hard question. Good.
Yeah, I mean, for a while I was really down on Illinois, where I'm from. I really was. It was a hard pill for me to swallow, saying we're not putting our capital, and we still own properties in the Chicago area. And so, but I think it's bouncing back. I think things are getting better. So I was very bearish on it, and now I'm kind of getting more bullish. I would say some of the Rust Belt areas. I mean, now Detroit's coming back. It's doing a lot better than it's ever have. So there's certain sectors like of Pennsylvania I don't think are great. I mean, I'm not very bullish on Philadelphia. Not that it's a bad city. I just haven't seen a lot of growth. I think because of some of the politics and the laws in New York and Los Angeles, I'm not bearish on.
And if I understand correctly, for Alliance, you guys are always the managers. Is that correct? Of the property, meaning you're the ones that, right? So for the listener, sometimes they get pitched by various managers, different offerings. Yep. How is it that you recommend, and obviously you're going to be biased and you're going to say, well, just go with Alliance, but how is it that they should on their own diligence the managers? What should they be looking for between 10 different pitches or 10 different managers?
Yeah, I would look at not only their track record, I would look at their leadership team, and most importantly, how do they solve challenges or problems or issues? Because when I'm looking at sponsor, I've invested in other sponsors and colleagues in commercial real estate and other asset classes. I want to know, like, when the chips are down, how you deal with it, how transparent are you, how communicative are you with your investors? One thing we pride ourselves on in Alliance and that I've installed in this company is we are extremely transparent.
That's great.
We'll tell you the good, the bad, the positive, the ugly. You might not like it, you might love it, but you're going to hear it. Because you know what? It's a marathon business, what we do. And integrity is one of the foundations. So it's transparency, integrity, consistency, and expertise is what you get with Alliance. And that provides that 7-star experience that we all want as an investor.
Let's say one of the listeners is looking to invest, so I'm going to act on their behalf. So what is my minimum? Do I have to be accredited? What is the timeline that I can expect money back, et cetera? So can you give me some of the high-level details there?
Yeah, sure. So let's just take the Alliance Medical Fund as an example, because we can get other asset classes. That fund is going to have anywhere from 18 to 23 assets, say, of medical and veterinary properties. So the minimum is 100,000. Our average investor invests about 300,000. And we have folks that invest millions into the fund. The reason why, the minimums are set at a certain level is, one, we only take accredited investors, And for everyone out there, if you don't know what a accredited investor is, you could Google it, but you either have $1 million net worth, or for the last couple of years, you've netted at least 200,000 in income. I think for you and your spouse, it's maybe now 300,000. They recently tweaked it a little bit. You could look it up. And the reason why we take that is, one, not only per the SEC rules and regulations, but also we want people that understand the risk in what we do. We're going to tell you the risk. We're going to show you the risk. We're going to explain it to you. But we find the more sophisticated investor really gets what we do. And also, we're looking for repeat business and long-term relationships, Slava. And that's really important to us because we want to produce wealth for you and your family. And the accredited investor is who we go after. And so it's $100,000 to come into that fund. We've had other syndications where we've had minimums of $50,000. We think we'll end up raising that to $100,000. And so it really depends on what you want to do and what vehicle you want to invest in, and how diversified you want your capital.
Great.
I like the funds because there's 4 benefits to funds. 1 is diversification. 2 is cost of capital. We get cheaper capital. 3 is purchasing power. When we go out in the market, especially this market, we could buy great assets at discounted prices. And lastly is scalability. I could buy an asset in a fund. I could do a 1031 exchange and take equity that's free for our investors from a sale and take one asset and create 3 assets. And now I just diversify them more, increase the equity and the profitability of the fund. And so that's why people invest in Alliance and love what we do. And so those are the opportunities if you want to invest with Alliance.
Great. So many of the listeners and I want to be as smart as you and as knowledgeable as you. So what is it that you're watching? What is it that you're listening to? What is it that you're reading? Can you give us some of those examples?
Yeah, well, reading, I read a lot of personal development books.
Okay.
I work on myself.
Like one example that you like?
I'm reading one right now. Let me give you the name. It's hold on. How to Be the Love You Seek.
All right.
And it's a personal, and a mentor of mine gave it to me and said, you need to read this. And when I become the best version of myself, it allows me comes out of me to help other people. And so that's a great way to help enhance your ability to produce wealth, communication, balance your emotions. So that's one thing. And then from a business standpoint, I read a lot. I read on the internet, different websites and business websites, and looking at what's going on in the stock market. I'll look at what's going on with interest rates. I'll watch the news. I'll watch like what's going on in our political environment because that's going to impact interest rates and production of revenue in oil and gas. I look at, and then also ask a lot of questions. I'll listen to other people's podcasts.
Like what's an example of a podcast you like?
I think Nicole Lappin, and I believe eventually I'm going to be going on her show. She has a really good show about money. So she talks about money. That's good. I like listening to different shows where friends of mine that are guests that are experts in sales or mergers and acquisitions that go on shows, and then I end up listening to that show. I like all different shows.
And our final question, we ask this as everybody, we put everybody on the spot, which is we're looking for one investment that 3 years out you think will be doing exceptionally well. So one public markets investment, which has a ticker symbol, and one private markets investment, which obviously can be in any vertical, in any space. You probably will pick in real estate, but it could be in any space. And the more specific, the better. So Ben, what are your 2 picks?
I like right now from private sector, I would put money in energy because I think it's down now.
How would you do that?
I would look at investing in oil and gas. And that's what I would look at.
Any more specificity on how you would put money into oil and gas?
Well, there's less sponsors out there that are soliciting alternative investments in oil and gas.
Okay, great.
I think that would be a really good vehicle from private. From a public sector, I look at things that I consume, right? So I'm going to look at, I'm going to look at a stock and say, maybe the oil companies are down, but if we start producing in this country, maybe it's a good time to double down on. I am a huge Tesla fan. I have 5 of them in my family, and I drive a Plaid, and I'm in love with it.
It's funny. You're pro oil and gas and pro Tesla.
But I'm pro Elon because this technology is brilliant, and there's no car off the line that can beat a Tesla Plaid. It's so fast, but so nimble. And the nice thing about Tesla, what I like that people ignore, is the safety of it. You can get T-boned and you're going to walk out of that car.
But to be specific, though, you were mentioning oil and gas as part of public as well. Is your pick Tesla, or do you have another pick?
Well, I think Tesla is a great automobile to invest in. And I think the one thing I like is I look at and go back to my point of who's running the show, who's making decisions, who solves challenges. Well, you have a guy at the top, Elon, that is leading that charge. And everything he does is he works harder than anyone. He makes great decisions. And it's a good, solid bet on that company. And when people count him out, he just accelerates. And I think it's a great company. There's so many great companies, and there's small ones you get involved. There are public companies, you can get pre-IPOs, but Tesla is a real solid company.
Great.
And there's some oil gas companies too that are public that if you could buy now at a discount and wait a few years, you might do extremely well.
Any particular one you would say?
I would say like, the folks at Shell, and looking at the larger guys, the ones that owe, BP, Amoco, British Petroleum, the, major players, Chevron, looking at people that have the capacity to not only grow, and you look at what companies have they bought recently. Those are the companies I think that will do really well in the next few years.
All right. Well, we covered a lot of content, Ben. So thank you very much for taking me on the roller coaster of your life and your investing. We started in Chicago, and you always knew that you wanted to create wealth, whether you were 8 years old breaking up cartons and arbing that at bars, all the way now to running an amazing company at Alliance for over 30 years. So it's incredible to hear the background. It's all about the managers. You love the hard assets. You love being able to get the tax advantages. You're a risk taker, even with your own net worth, 65% in alternative investments, which is incredible. You love leveraging into talent, pay it forward. People help you, you help them. It always works out that way. We had a down in the market in consumer real estate, 65% down in transactions in 2023. So there's really an opportunity to pop back up. You also think that there's an opportunity as there's going to be potentially a shift in the political landscape. There's going to be an opportunity for better use of energy, potentially more production of growth in the economy. So there's potential for better consumer real estate opportunities. You mentioned to us about, I had no idea there were so many different verticals in commercial real estate, which is incredible. Obviously, Alliance has so much leadership, over 200 years of experience in your background personally, and you really gave us specificity. You love medical and veterinary, you love industrial, and now you have this whole new product. You're in love with multifamily as well. You're not as interested, a little bearish on office and residential, and there's going to be some challenges in multifamily you plan on taking advantage of. You're a huge fan of Florida, and specifically Orlando to Tampa, Dallas and Fort Worth, and you gave us a bunch of other stuff. Illinois, Rust Belt, Pennsylvania, New York are a little bit challenged. We'll see what happens there. And make sure you check out the track record, see what people are saying. And you had a great line, which is the shepherd of my capital will, solve problems. I like that.
Yes.
I like that.
Yeah,
and, if we're interested in Alliance, you have to have a 100K minimum. And, you gave us a great book, How to Be in Love with the Love You Seek, How to Be the Love You Seek. And finally, you gave us 2 great picks, oil and gas on the private side, and then Tesla on the public side, and many more. Thank you, Ben.
All right. Thank you, Slav. I appreciate you having me. It was great seeing you.
Smart Humans with Slava Rubin is a podcast brought to you by the team at Vincent. Any data, text, or other content in this podcast is provided as general market information and not as investment advice. Past performance is not necessarily an indicator of future results. For more information on alternative investing, check out Vincent at www.withvincent.com.